Have you ever wondered how the mighty Bitcoin works? How did this unacceptable idea become the king of digital transactions within 12 years of its launch? If there's one cryptocurrency that you must know about, it's Bitcoin. So, in this video, we're going to explain everything in detail. It is important to note that before investing in Bitcoin or any other cryptocurrency, it is crucial to conduct your own research and due diligence. Cryptocurrency markets can be highly volatile, and it's important to understand the risks involved before making any investment decisions. Before we start, make sure to click that like button and subscribe to Money Internet so you never miss a video from us. Now, let's get straight into the video. Bitcoin is a digital currency that substitutes for central bank-controlled fiat money. Or we can say, it's like digital money without any regulation from the government. Everything we buy today has to go through a bank or credit card company that takes a cut of the transaction and who rely on our trust that they'll do everything right. But Bitcoin, on the other hand, isn't regulated, as it is issued by a monetary authority and is extensively utilized in a market. Bitcoin has become the central hub for bigger transactions without worrying about borders and third-party checks. So keep watching as we're going to explore how a coin worth $77 in 2013 became so powerful that it was trading at $67,617 in 2021 and how you can invest in it in 7 ways. So how does Bitcoin work? Okay, so in terms of how Bitcoin works, it is digital money that functions independently of any central authority or monitoring by banks or governments. It is instead based on peer-to-peer software and encryption. That means all Bitcoin transactions are recorded in a public ledger and copies are kept on servers worldwide. Similarly, every transaction is broadcasted to a network and distributed from node to node. Every 10 minutes or so, miners gather these transactions into a group known as a block, which is then permanently added to the blockchain. To make it easier for you, virtual currencies are stored in digital wallets, similar to how traditional coins are stored in physical wallets, and may be accessed using client software or a variety of internet and hardware solutions. Bitcoins are now split into 7 decimal places. A milli is a thousandth of a Bitcoin, and a Satoshi is 100 millionth of a Bitcoin. There's no such thing as a Bitcoin or a wallet, only a network agreement regarding currency ownership. When making a transaction, a private key is used to prove ownership of money to the network. A brain wallet is a concept in which a person may remember their private key and use it to recover or use their virtual cash without any other software. In simple words, Bitcoin is a digital money that functions independently based on a peer-to-peer software, and all the transactions regarding it are recorded in a group, and that is called a blockchain. Is Bitcoin future-proof for future-aloof? Bitcoin had a pretty rough start the previous year, but analysts believe it will reach $100,000. It's only a matter of when, not if. Despite the instability and recent price drop, many experts believe Bitcoin is on its way to exceeding the $100,000 barrier, though they differ on when that will happen. In addition, according to a recent Deutsche Bank research, over a fourth of Bitcoin investors predict the price of Bitcoin will be more than $110,000 in 5 years. The instability is nothing new and is one of the main reasons experts advise newbie crypto investors to be extremely careful when dedicating a portion of their investment to Bitcoin. Bitcoin's value has risen steadily throughout the years, just like any other cryptocurrency on the market. It's only natural for Bitcoin investors to be intrigued about how high it can eventually go. New cryptocurrencies were established due to the hard-working people maintaining the blockchain. New systems, such as Bitcoin Cash and Bitcoin Gold, attempt to modify the ecosystem's settings to process more transactions more quickly. Bitcoin almost reached $70,000 in 2021 before dropping to roughly $40,000, and 2022 was much worse, with Bitcoin values dipping as low as $15,599. However, prominent banks are still paying attention to Bitcoin, with Goldman Sachs reinstating its cryptocurrency exchange desk and BNY Mellon launching digital currency custody services. According to Citi, Bitcoin may become the preferred money for international trade. This follows purchases in cryptocurrencies by PayPal and Tesla in early 2021. Tesla purchased $1.5 billion in Bitcoin, while PayPal offered to acquire cryptocurrency custodian Curve. Citi stated that the future of Bitcoin is still relatively unknown but is on the verge of general acceptance. Institutional investors' desire is fueling widespread interest in cryptocurrencies, but concerns about custody, security, and capital efficiency remain the same, according to Citi. There is one thing for sure, it is that it is going to be more mainstream than it used to be. And after purchases made by PayPal and Tesla, it's going to be on the verge of general acceptance in the near future. How should you go about investing in Bitcoin? Investing in cryptocurrencies may take numerous forms, from purchasing cryptocurrency straight to investing in cryptocurrency funds and enterprises. You can use a cryptocurrency exchange or specific broker-dealers to invest directly in cryptocurrencies. You can invest in firms with a partial or whole emphasis on cryptocurrencies. Cryptocurrency mining firms, mining hardware manufacturers, and companies such as Robinhood Markets Inc. and PayPal Holdings Inc. are among your choices. Understand exactly what you're investing in, just like how you do with any other investment. When purchasing stocks, it is critical to study the annual report and other SEC filings to research the company adequately. Plan to follow the same procedure for any cryptocurrency, since there are practically thousands of them, each of which operates differently, and new ones are generated daily. It would help if you comprehended the investing logic for each deal. Investing in cryptocurrencies is not for everyone. Cryptocurrency values can be unpredictable, making this investment unsuitable for conservative investors. If you are ready to take on additional risk as an investor, investing with one or more cryptocurrencies may be ideal. Many cryptocurrencies are backed by nothing, neither tangible assets nor cash flow. That is the situation with Bitcoin, for example, where traders rely only on somebody paying more for the product than they paid for it. In other words, unlike stocks, where a company's income may expand and generate returns, many crypto assets require the market to become more enthusiastic and favorable for you to profit. Ethereum, Dogecoin, Cardano, and XRP are among the most popular currencies. So, before you invest, be sure you understand the possible gain and risks. It may be all gone if an asset or cash flow does not respond according to your financial gain. You may buy Bitcoin directly via significant cryptocurrency exchange, such as Coinbase or Binance. Buying shares in a firm with considerable Bitcoin exposure, like a Bitcoin mining company, is another option to obtain investing exposure to Bitcoin. A third alternative is to invest in a Bitcoin-focused fund, such as an ETF. Is Bitcoin an intelligent investment to make? Over the previous decade, collective insanity has grown up around Bitcoin. It isn't easy to forecast if this cryptocurrency will emerge as the global reserve currency or a commonly accepted store of value like gold. Some investors are scared of the thrill it will bring, riches or devastation, but others desire to chase the possibility of big rewards by investing in Bitcoin. Bitcoin is undeniably a game-changing technology and is far less dangerous in 2023 than in 2012. Bitcoin may be an excellent investment if it matches your risk tolerance and market forecast. On longer time horizons, the history of the Bitcoin market is predictable. Bitcoin and Ethereum have traded in regular cycles, and both have rebounded from every significant fall except the most recent to hit new all-time highs. So, what are your options? Investing is a disciplined plan that achieves specified investment targets over a more extended period, typically 5 years or more. Investors may devise a strategy to save for education, buy a home, or plan for their retirement. The next step is to assess your risk tolerance. Because cryptocurrencies are volatile, whether they are a profitable option relies on the amount of risk you are willing to take. Higher instability investments are not ideal if even little market fluctuations keep you up at night. Crypto assets are dangerous because their price volatility is similar to other asset types, such as equities or high-yield bonds. You must be prepared to endure quite large price fluctuations or probable loss. How much can you earn or lose? Cryptocurrencies are designed to be volatile. The cryptocurrency markets are highly speculative, and there is no recognized regulatory framework for their trading. As a result, cryptocurrencies move at a more volatile pace than equities and bonds. This volatility can be positive or destructive depending on the investor's perspective. For example, if you bought Bitcoin at $20 in 2011 and held on to it until it reached $20,000 in 2017, you would have gained a 1,000x return. On the other hand, if you bought Bitcoin at $10,951 in 2018 and sold it for $3,847 in 2019, you would have lost nearly 70% of your investment, but it is still possible to profit from Bitcoin. It can be traded, lent, held, or earned. Returns on this unpredictable asset are not assured. Just as you can gain money when the price rises, you can also lose money when the price falls. I hope you are enjoying the video so far. There are a lot of different ways that you can earn money with Bitcoin. Also, on the other hand, you can try day trading with Bitcoin. It's possible to make money by buying and selling Bitcoin within short windows, moving in and out of positions as the market changes. But similar to day trading with stocks, you will likely lose money this way. Individual investors should avoid Bitcoin mining since it might be a lucrative method to generate money with Bitcoin. Because of the necessary computational power, the initial and recurring costs can vastly outweigh the mining profits collected. The Bitcoin blockchain has a proof-of-work consensus method, which implies that miners are responsible for confirming payments in order to safeguard the network safely. Every 10 minutes, new blocks of transactions are added to the ledger, and the miner who validates a new block gets awarded 6.25 Bitcoins. Miners may also collect transaction fees from users who want their transactions processed quickly, which can add $4,000 to the payout for each block. However, in order to be eligible for a Bitcoin payment for verifying a block of transactions, you'll need a powerful processor known as an ASIC or application-specific integrated circuit, which may cost more than $10,000. To compete with other miners, you'll also have to spend hundreds of dollars on electricity, and your earnings aren't assured. On the other side, you may experiment with day trading using Bitcoin. It is technically achievable to profit by buying and selling Bitcoin in quick bursts, changing positions as the market moves. However, like with day trading equities, you are significantly more likely to lose cash this way. To understand cryptocurrency volatility, it's crucial to understand how supply varies as more people acquire them and the mining process continues to generate new coins. When more individuals desire to buy Bitcoin or Ethereum, the value of such coins rises due to greater demand. The growing demand for coins and the restricted supply of only 21 million Bitcoin causes a price increase since more people want to buy them than there are available to sell. However, as the number of coins available rises, the value of those coins will fall since more individuals will be incentivized to acquire them and more will be eager to sell them. As a result, the marketplace becomes much more aggressive and prices may fall. As a result, cryptocurrencies with many circulating coins have lower values than those with fewer coins in circulation. This is because the price falls when more coins are on the market, indicating less demand. That is one of the causes Dogecoin is unlikely ever to hit $1. This holds not only for cryptocurrencies, but also for stocks and other financial assets. Okay, so now you know a lot about Bitcoin, but so how can you invest in it? Here are 7 ideas in which you can invest in Bitcoin. Those are: buy and hold strategy. When you acquire a digital asset and keep it in your virtual wallet for an extended length of time, this is referred to as holding. When you choose the purchase and hold method, you won't be performing any Bitcoin trading. You just purchase coins and store them. This is a long-term plan, earning a yield. Another popular cryptocurrency investment approach is getting a dividend. Using this method, you purchase cryptocurrency and then hold it for a set period of time in order to produce a financial return. The difference between generating a yield and hodling is that while earning a yield, you only keep your cryptocurrency for a certain period. The idea is to purchase your coins at a low cost and then sell them at a greater cost. This is a plan for the short to medium term. Use dollar cost averaging. Dollar cost averaging is a crypto investment method that involves investing set amounts of money into cryptocurrencies on a monthly basis. Just like SIP's systematic investment plan, value investing, the goal of value investing is to locate an asset that is trading for less than it is worth. You would then buy that asset with the expectation that its market value will rise over time, just like how Warren Buffett did and acquired a lot of his wealth. Balanced portfolio. In this technique, you would buy the equal amount of each currency in which you would like to invest and create an equal amount of balance in those multiple currencies. Unbalanced portfolio. You might utilize the unbalanced investment portfolio to profit on the currencies you believe will perform best. You would distribute each investment in this method based on how well you believe each currency will do and invest a larger amount in that and less in other currencies. Profit reinvesting. Once you have a great collection of currencies and are profitable, you may begin to diversify into other currencies with higher prospects and compound on the basis of the profits that you are making. That is by investing the profit amount. To make sure that you learn about these other types of cryptocurrencies that have a lot of coins in circulation and those who don't, check out our other videos on cryptocurrencies and stay ahead in the financial game. That is it from today's video. I hope you enjoyed the content of the video.